Hey, everybody. Welcome back. It's a lovely Wednesday. Holy smokes, is it sunny outside? It's a beautiful Wednesday here. Welcome back to the Real Deal Pod with Geoff and Allister. We're here with episode number 12. Geoff, my man, how are you doing on this sunny Wednesday?
I'm doing fantastic. I always tell myself I'm in a glass prison when it's a nice day, whereas like I see the beautiful outside, but my glass prison is like preventing me from getting there. But you know what? I might have to do an escape from Alcatraz here pretty soon and go enjoy it.
Right? It's incredible outside. Well, incredible outside. I have been lucky enough to be able to get out there. I actually just got in not too long ago from a showing at one of my listings, and then I have to go run out after this and go hang up a sign at another one of my listings that just came to market. So I have been able to take a second to enjoy the outdoors. I'm going to go for a walk later on, though, and that'll be me popping in my headphones. I'm going to go for a walk, though, and really enjoy it because, man, it is absolutely gorgeous. We have waited for this, and we've got 3 days coming up of north of 25. It is going to be just beautiful. I encourage everybody, take a break, take some time out, get out there, enjoy the weather because it's going to be spectacular.
Yeah. Well, how was your last weekend?
Well, my last weekend was good. We didn't, it was actually, I can say honestly, pretty chill. I worked. Update to the whole socks debate that we had follow up from last week. I have now won the debate. I decided to go outside with my black socks pulled up, and my lovely daughter looked and she said, "Okay, point taken. There is an age where that becomes inappropriate." Yeah, she's just like me. So I won. 47 years old is not the age to be wearing your socks pulled up. It's not a good look. Thank you.
Unless you're riding a bike.
Yeah, unless you're riding a bike. But other than that, yeah, no, it was actually pretty chill. We just relaxed. My son, he had a party, was out at a pool party on the weekend, so he had fun doing that. And it was nice. It was easy. I'm actually, they're headed out. Michelle and Elizabeth, they're headed out this weekend, though. Not this weekend. Sorry, the weekend after. They're headed to Whistler for a competition that I unfortunately can't attend because I have to work. But that'll be fun for them.
Yeah.
How about your weekend, buddy?
Yeah, no, it was good. Spent a lot of time with some good friends. I jokingly always say, I'm on a health kick right now. I'm 53 years old, so rather than buying a Corvette or a Harley, I decided to kind of get active. So, ventured out to do a 2-hour bike ride on Saturday, and I blew a tire 36 kilometers in. Didn't know how to change it, so pretty much made a phone call, got rescued. Then then Sunday again ran around the seawall and got some Cardam donuts. We went to Hats Off Days, community event out in Burnaby.
Oh, sweet.
Yeah, it was a great weekend.
What's Hats Off Day? What is that?
Hats Off Day is like it's in Burnaby. It's kind of like the commercial days, and Kitsilano has their days.
Right.
This is the event or the community event that Burnaby has. So I don't know what street it was on, but it pretty much closes the entire main street, and you got vendors and food and just thousands of people there. It's very, very cool.
That's spectacular. So anybody looking to move into communities, check out your community. Check out to see if your community does those types of things, man. That's spectacular. Like, those are the type, when I'm helping my clients buy, I always say, hey guys, I can help you find a home anywhere. That's easy. There's nothing. You can find a home anywhere. It's the community that you're buying into, right? It's the community that you're going to grow with, your family is going to grow along with. So you have to make sure that community that you're immersing yourself into is one you want to participate in, you want to be a part of. So when they do stuff like that, man, that's amazing.
Yeah.
Love it.
Yeah, no, it was a great time. And I think this week, Commercial Drive is having I think they call it their Italy days. So anybody that's in Vancouver, go and hit Commercial Drive, and that's going to be quite an event as well.
Oh man, that might have to be where I take a spin up to, man. Me and Italian food, we have a great relationship. We love each other a lot.
Yeah.
My taste buds think they're fantastic. Their food thinks my stomach is outstanding. So I'm gonna have to go take a look. Gnocchi, oh man, if you can make gnocchi well, oh, you got me. Oh, amazing. Awesome, buddy.
Yeah.
Awesome. Well, man, we've had a big week. I know today my phone has been ringing quite a bit with the new rate announcement that just happened. So we did the anticipated quarter point drop has happened. So I know it's made a lot of buyers thinking, hey, it's time maybe that we get out and start looking at things, sellers are thinking, oh, does this mean that the price of my property is going to go up because the interest rates are going down? Because that's the other thing that us realtors have been explaining to people, when interest rates go down, those property values start going up. So I've been starting to get those calls now of, how does the shift benefit me? So but wanted to know, like, we figured it'd be a good time to see how that works on your end. And I know you and I, we have the Friday call that we always do, and we talk about your buckets and that your rate falls under and all that sort of thing. So I thought that would be a great thing for us to discuss today is how are the rates determined? What are these magical buckets that we always hear about? And just,
Yeah.
kind of talk about how this stuff going on this week is going to affect them in the upcoming future.
Well, yeah, let's kind of recap as far as what happened today, June 5th, mark it on your calendar. The Bank of Canada dropped its interest rate from 5% to 4.75%. And what that really means is that the prime rate follows suit, and our prime rate reflected the rate drop of a quarter of a point. So our prime rate went from 7.2% down to 6.95%. So again, these Bank of Canada announcements, when they are reviewing their interest rate, which has a direct impact on the prime rate, has effects on anybody that is in a loan that has a variable rate to it. So quite often a variable rate mortgage is attached to prime. So if the prime is going up or down, your variable rate payment is going up or down. Same thing if you are in an unsecured line of credit, which means it's not attached to your home. That again has an impact as far as what your payment's going to look like. And again, my fun facts, what it breaks down to, every quarter of a point that your prime rate drops or increases, that's about $15 on every $100,000 that's being borrowed. So again, we often think that it's substantial savings that people are incurring or having to pay. Now, again, depending on the size of that mortgage, that can be true. But what this really means in simple language is that on every $100,000 that you've borrowed, it's $15 less to your mortgage payment.
Right. And that's where we really like to speak about affordability when it comes to the overall picture, as opposed to just focusing on that rate, because the affordability is the most important thing right now. Because as you just said, 0.25%, that's great. It's amazing. It's some hope, right? It gives some people that little bit of a thought of a relief. But at the end of the day, to your point, it's $15.
Yeah.
Right.
On every 100,000.
Right. On every 100,000. Right. What's more important to look at is the affordability. Is it affordable? Because that rate, as we know, and we were speaking earlier, and I don't want to kind of take us on a train off of where we're going, but we're looking at potential future rate drops that could happen, right? So I mean, looking at the affordability right now is important, knowing that potentially we're going to continue to see relief. Now, we both have been hearing some numbers that could potentially happen in the future. We'll discuss that later, but it's really, again, just to make it short, though, focus on affordability right now.
Well, it's the affordability, Allister, and we've talked about this too. It's also the good vibes that it sends off to people.
Yeah.
And it gives them a little bit more peace of mind about moving forward, right? So we have another Bank of Canada meeting coming up July 24th.
Yeah.
And again, what happens if it continues to drop another quarter of a point? I think that's even going to create more momentum. Now, is that going to happen? Who knows? But what we have to understand is that variable rates are all dictated by our inflation rate, right? So not a variable, our prime rate is all dictated by our inflation rate. So right now, like we've spoken about, our inflation rate has been the lowest it's been in the last 3 years. Obviously, the Bank of Canada wants to see our inflation rate at 2%. I believe right now it's at 3.7%, and they are liking what they're seeing. So therefore, with this rate announcements coming in, but again, we have to be able to maintain where we're going, and ideally that ideal inflation rate is 2%. And as we get there, and as it becomes a little bit more consistent in getting there and stable, that's when we're going to see continually rate drops with our prime rate. Now, lots of economists, when we were beginning January of 2024, many economists were believing that we were going to see a full 2% come off of our prime rate. We're halfway through the year. That has not happened. We've now just seen our first rate drop of a quarter of a point. But people are still talking about that. And will that happen? Possibly. Will that happen by the end of this calendar year? I'm going to probably bet a silver dollar that it won't. But again, our variable rates, again, all dictated by what's going on inside our Canadian borders, which is all relative to our inflation rate. And our target inflation rate is at 2%. Currently, we're at about 3.7%, which is the lowest it's been in the last 3 years. So again, that is how your variable rate is affected. It's all affected by inflation rates and what the Bank of Canada does with its overnight lending rate, and the prime rate just follows shortly after.
So just quickly to pause, so people, I guess the people maybe know, or that for people that don't know, how many meetings does the BOC, Bank of Canada, how many meetings do they have each year? I believe it's 10, is it not? No, 8?
10? I believe it's 8.
8. Yes. No, it is. It's 8. Yes, it is. It's 8. Yes, it's 8.
Yeah, so 8 Bank of Canada meetings. The next one is coming up July 24th. So the other thing that people, and again, I've had many conversations with people saying, hey, I'm just going to wait until this Bank of Canada announcement. And we talk about this every week, that understand that the Bank of Canada direction on the overnight lending rate, which again has a direct impact on the prime rate, affects variable rate mortgage holders only. Right. Fixed rates are all dictated by bond yields on bond yields outside of our Canadian borders. And right now, we actually have, again, a little bit of a perfect storm to get a lot of people motivated, because right now we're starting to see those US bond yields dip. Right. And as the US bond yields dip, we're also going to see our fixed rates dip. Now, again, with the news of our prime rate now dropping a quarter of a point, with the news that our fixed rates are going to also be dropping because of bond yields, again, I think we're going to start seeing a lot of people get excited about moving into the real estate market, that were on the fence waiting for these announcements. And again, I don't know about you, Allister, but we have been extremely busy this week, and I believe it's going to continue to move forward. And if it continues in July, I think this is really going to be our new spring market.
And we were talking about that. Just the listings, we've seen an absolute monstrous jump in listings, close to 7,000 now. And where we've been sitting at, traditionally over the past few years, sitting at 4,000, which has been a direct relation to why property price values have been so high, was because our inventory has been so low. So now we're this interesting nexus where we have this lowering of the rate, right? And now we have this abundance of listings, which would normally entail, is this going to be a buyer's market, right? Because, sorry, Geoff, I think we might have lost your mic.
Yeah, no, sorry.
That's all right. No worries. Sorry, I thought you asked me a question and I got lost. No, so but which would traditionally, with that many listings coming to market, that would generally entail a buyer's market. It's going to be interesting to see with this activity, right? With this rate drop, how does that push now our quote unquote spring market into happening in the fall?
Yeah.
Right. It's going to be very interesting to see how it plays out. And here's something that when just as you were talking, it harkened back to conversations that we had with clients during the pandemic regarding their rates. Right. We were during the pandemic because people were talking about the rates, about the rates falling or the rates going up. Right. So we were saying if you're worrying about the rates going up, right, get your rates held, get your fixed rate held. So do you think that people now have been conditioned to waiting for the BOC, the Bank of Canada announcement, because of what was happening in the pandemic and the rates fluctuating and changing, and then people saying, hey, I got to get the rate, those fixed rate people were saying, hey, I've got to wait for this announcement and then see, let me lock in my fixed rate so it doesn't change? Did we condition people to pay that much attention to the Bank of Canada rate announcements?
I think we just became a little bit more hyper focused on it.
That's what I'm saying. Yeah. I'm wondering if that's what we did. Because before, and again, like my real estate career started prior to, of course, 3 years prior to the pandemic, but we had just sort of come out of that massive craze that was happening in 2015, right? 2015, 2016, and we had, then we had to start making new rules because there was all of those other quote unquote factors going on that were amiss, right? So I never heard that much at the initial part of my career. Didn't hear that much about people waiting for an announcement from the Bank of Canada, and it wasn't until the pandemic that you just heard that all the time, right? Okay. All right, listen to the announcement, get your rate held, get your fixed rate held, get your fixed rate held. So now it's the reverse, right? We're just in the reverse for the variables.
Yeah, I think that all came to light when we started seeing the variable rate increasing. So keeping in mind that the variable rate has increased, I believe, 11 times over the course of the last 2 years.
2 years, yeah.
So yes, I think we became hyper focused on the Bank of Canada meetings, knowing when they were, waiting to see what those announcements were, because again, a lot of us had a direct interest on it because a lot of us had variable rate mortgages. So naturally, you become focused on something that's going to have an impact on your monthly expenses, right?
Right.
So as we're moving forward, I think that just naturally becomes part of you because that's what we've been doing for the last 2 years. And I think that to your point is, yes, there's a lot of people waiting for these Bank of Canada announcements. But again, a little bit again, if you're an existing variable rate holder, to see what that means. But also, when we've talked about this before, when it comes down to purchasing and choosing rates, a lot of people are waiting, but still deciding to do a fixed rate, which again, these Bank of Canada meetings has no direct impact on that.
And that's my point, is that's where I think, and that's where I'm afraid we've taken people, is we've sort of confused people on how to think now when it comes to rates, right? And so now they're so confused, and now it's paralysis almost by analysis, right? I'm waiting to hear things. I'm waiting for people to tell me what to do, as opposed to allowing people to help, or listening to what people are saying to allow you to make the better decision. People are now waiting to be told what to do, and it's so dangerous, right?
So what you're saying, Allister, is media has done its job once again.
Yeah, very well. I'm saying very well, very well. Yes, media has done their job very, very well. Yeah, very, very well. Yeah.
And this is also important why listeners get onto podcasts that can educate people,
really,
and redirect them on the proper lane, right?
Yeah.
So I always say that media sells sex and fear. So if it ain't sexy and ain't fearful, you ain't really listening, or you're not being told about it.
Yeah, it's true.
And that's where we go back to the Bank of Canada meetings, and understanding that the Bank of Canada meetings are all about the determination of interest rates, the overnight lending rate, which has an impact on the prime. And when it comes down to rates too, it's also really important that when people are asking you, hey, well, what are the rates?
Yeah.
It's not as simple as back in the day when the answer to that was, well, how much do you have down? Well, I have 20% down. Well, this is your rate.
Right.
Well, I have less than 20% down. Well, this is your rate.
Right.
In 2024, there is such a wide rate range now. It's not as simple as, hey, if you have 20% down, it's this.
Right.
If you have less than 20% down, is this. There's actually 4 buckets of rates. So when people are asking anybody what the rate is,
Right.
and they're not asking follow-up questions and just saying, hey, well, this is what it is, there's a high likelihood that you're not getting the right rate because you might not be fitting in one of these 4 buckets because important questions haven't been asked of you.
Right. And so did they do this in order to provide people with more flexibility, right? As opposed to just pigeonholing you in one section, or what was the reason for the change to make it, sounds a little bit more flexible. So it sounds better, right? When you have a few more options, it sounds better, but what was why the change?
Well, I think the change came down to terminology, and it came down to down payment. It came down to like CMHC, Sagan, and Canada Guarantee and what they can get involved in. So the 4 buckets of rates, Allister, are these. There's an insured bucket, right? So an insured bucket means that you're purchasing something, you're living in it, and you're putting down less than 20%. Okay. So what that means is that you have one of the 3 Canadian insurers either insuring it, be CMHC, which we all know and are familiar with. We have Sagan, and then we have Canada Guarantee. So these are the 3 insurers here in Canada. And when you are putting down less than 20%, one of these 3 insurers are insuring the mortgage. Therefore, it's the insured bucket, right?
Okay.
And therefore, this is when you're seeing the sharpest rates.
So that's when you're saying, get me the lowest rate possible. I hear you've got a rate of 4.2. That's the lowest I've ever heard of in the last, 2 years. Get me that rate. That's what's happening there.
Well, the question then has to follow is how much are you putting down?
Okay, right.
Well, I'm putting down less than 20%.
20%. I'm a new first-time buyer, so I'm going to put down, 10%, 5%.
But again, just to even kind of go down that rabbit hole,
you don't have to be a first-time buyer. Yes.
You don't have to be a first-time home buyer.
Right. Yes.
You can put down as little as 5% on anything that you own, providing that you're living in it.
Yeah.
And or it's a second home, which means that an immediate family member is living in it without a rental obligation, or it's your vacation home. So the question then will follow is, well, how much are you putting down? Well, I'm putting down less than 5%. Then yes, these are the sharpest rates on the fixed side. This is the sharpest rate on the variable side.
Right.
Now, there's also another bucket called an insurable bucket. Now, an insurable bucket means you're buying a property that's less than $1 million. You're using an amortization of 25 years, which are insured guidelines, but you're putting down 20% or more. So what that means is that you're putting down more than 20%, but because the property is less than $1 million and you're using a 25-year amortization, you can get insurable rates, right? And again, your insurable rates are all determined by how much of a down payment you have. So if you have 20% down, this is your rate. If you have 25% down, this is your rate. If you have 30% down, this is your rate. If you have 35% down, this is your rate. So within this insurable bucket, there's 4 different rates within that bucket, depending on what your down payment is.
See, and again, so important for people to understand this, because some people's, more to Geoff's experience, some people's mortgage lenders, mortgage brokers, mortgage specialists, part of the power team, whatever you want to call them, some people don't even know. Some people don't even know that.
Well, and then we will get a comment to as well. I'm putting down 20%. What do you mean it's insurable? So what that means is that when you put down less than 20%, you, the borrower, are paying the insurance premiums. Okay. When you're putting down 20% or more, and the property can still fall under insurer guidelines, which is properties that are less than $1 million, and you're using a 25-year amortization, that is when the lender will pay the insurance premiums. And again, when you're in an insurable rate, there is a bump on the insured rate. So they're not as sharp as the insured rates unless you have 35% down. So there's a bump on the insured rates when you are in an insurable mortgage.
Okay.
Like clear as mud, right?
Clear. I was just gonna say I was just gonna let you roll with that. I had nothing to say after that one because I was like, that made zero sense to me, and that's why I use you.
Again, it's confusing.
Yeah,
right?
it really is.
Then there is an uninsurable bucket.
Right.
Now, an uninsurable bucket will fall onto any property that you're putting down 20% or more. That property can be $1 million or more, and or you're using a 30-year amortization. So if that property is $1 million or more, and sometimes $1 million or less, but you're putting down a minimum of 20% down, but you're using a 30-year amortization, that then falls into what they call the uninsurable bucket, right? So this is when there is no insurance on it that's either being paid by the lender. Remember, that's your insurable bucket.
Right.
And because you have 20% down, it's not falling into your insured bucket, because that's when you're putting down less than 20%. That's when you, the borrower, are paying those insurance premiums. This now is the uninsurable bucket because you're putting down 20%. That property is either over $1 million, and or you're using a 30-year amortization. And then again, there's a bump on those rates, right?
Right.
The fourth bucket, because I know you're going to ask.
Yes, I was just going to ask you that, my friend.
I know you're going to ask, is when you are purchasing something as an investment.
That's where I was getting to. Yes. If you're purchasing an investment, what does that look like?
So again, if you're purchasing an investment property, you have to put down 20%. Yeah. It falls outside. It is an uninsurable mortgage because, again, it's not a primary residence and or a second home. It's an investment property. And then there's another bump on those rates when you are buying an investment property. So again, I go back to what I originally saying. When people are asking you, hey, what is your best rate?
Yeah.
There's many questions that need to follow.
Right. And which actually makes a whole lot of sense. Again, once it's broken down like that. One thing I wanted to ask for people, because a lot of people don't know, when we speak about insurable mortgages, and you were talking about there's three, right? There's people that are the insurers of our mortgage: CMHC, Sagan in Canada, and
Canada Guarantee.
Yeah. Are they all the same?
Yeah, well, one is a public entity, right? As a federal entity, which is CMHC, and the other two are private entities, right? Okay. So that's Sagan and Canada Guarantee, but they pretty much are three of the same.
Okay. Is one easier to get lending from than the other? I've had the experience in my career where working with a client and they had a lender that they were working with. They actually didn't know that there was, I believe it was Sagan. They didn't know. So I don't know if that's normal, but that's why I thought, you know what, let me pause and ask you that question. Is that a common thing that people don't know about Sagan?
Well, yeah, Sagan used to also be called Genworth, right? So, people are familiar with Genworth, which now is Sagan. But yeah, I would probably weigh very heavily that a lot of people do not know that there's three insurers. Right. And foundationally, they're all pretty much the same. But like lenders, they also have different policies with different things. Okay. So what CMHC might like, right, Sagan won't. What Sagan might like, CMHC won't. What CMHC and Sagan might not like, Canada Guarantee may. So there's three insurers which foundationally are the same, but again, have different policies on different things, which again can turn that no into a yes. So I always tell people this is like, hey, if your mortgage is being insured in any way, shape, or form, either in that insured bucket or that insurable bucket, and it's getting declined because the insurer is declining it, it's not necessarily because of the borrower, then always ask, well, which insurer declined it? Well, it was Sagan. Well, did you take it to CMHC? Did you take it to Canada Guarantee? Because Sagan may decline it, but the other two may approve it. So again, you always want to make sure that every stone is unturned. And again, if you are just general public, you don't know that there's 3 insurers. Everybody knows CMHC because everybody's heard of CMHC.
That's what I mean. That's what you read. That's what the media tells you about is CMHC. You don't read, you don't hear Sagan, you don't hear Canada Guarantee in any of the real estate articles that you follow upon normally.
Well, and here's the other thing too, Allister, and I'm going to put a plug in for a mortgage broker, is that mortgage brokers have access to over 40 different financial institutions here in Canada. There are financial institutions that don't work with all 3 insurers, right? There's financial institutions that will just work with CMHC and Sagan, and Canada Guarantee is not even an option. So again, as a broker, if one of the insurers are saying no, are you working with a lender where they are willing to take it to another insurer to get their direction on it, right? And some lenders are willing, some lenders are not. Some lenders that may be willing might not have Canada Guarantee as an option to send their files to, right? Mm-hmm. So again, when you are working with a high-end, top Canadian mortgage broker,
right?
Geoff Lee, you have access to lenders that can basically give you every option that is available. So if a no is going to be a no, it's not going to be a yes somewhere else.
Right. And I think that's the most important thing, again, to understand, because people always laugh. Some of my clients go, that's a little bit drastic. And I'm like, no, man, your health and your money are equally important. Those are the 2 things that literally get you through your life, is your health and your money. So like, I'll say to a client, if you were sick, right, would you go to a doctor that would only afford you one option at one medicine that may cure you? And then if it didn't work, said, well, I don't know, I don't have anything else for you, right? Or would you go to a doctor that had multiple options to address your health issue and make you whole again? What would you pick, right? Everybody without question picks, the latter. They pick the person that can offer them the most options. Well, again, when it comes to your mortgage, when it comes to your real estate, when it comes to your biggest asset, your largest, especially here in British Columbia, average for pricing, being in the Fraser Valley, in Lang and Clayton, where I live, $1.5 million, man. When you are dealing with that, why would you not go to a person that's going to offer you those same multiple options? It baffles my mind. I just don't, the thought process still sometimes, I can't wrap my head around it. Sometimes I just got to let it be, or else I'll go nuts. But it's crazy to me. Yeah. Crazy.
Well, my lasting thoughts are this, and I always like to summarize things in a Cole's notes. I'm going to say Geoff's notes.
Yeah.
The takeaways here is that when you are asking for a rate, it's not necessarily a simple answer, right? There are questions that need to be asked, which determines which bucket that you're going to be dropped into. And remember, your sharpest rates are going to be in an insured bucket, which means you're putting down less than 5% and you're living in it.
Right.
Then there's an insurable bucket, means you're putting down 20% or more in it. The property is less than $1 million and you're using a 25-year amortization. Then there's the uninsurable bucket where you're living in it, putting down 20% or more, and that property is either $1 million or higher. And if it's under $1 million, you could possibly be using a 30-year amortization, which makes it an uninsurable mortgage. And then there is another bucket of uninsurable mortgages when you're purchasing an investment property. And each bucket has different rates.
Yeah.
Digging deeper into this, understand that fixed rates, folks, fixed rates, drive this into your heads, put it on a sticky, put it on your car. Your fixed rates are all determined by bond yields outside of our Canadian borders. Variable rates are all dictated by what's going on inside our Canadian borders and all to do with inflation rate and where our inflation rate is. If our ideal inflation rate is 2% and we're slowly getting there, we're going to start seeing our variable rates drop, which is all related to the prime rates. They are not two of the same. Bank of Canada meetings have no direct impact on fixed rates. Fixed rates, again, are all dictated by bond yields outside of our Canadian borders. All right. We got this?
Yeah, I'm with you, man. You're coming in hot and coming in strong. So I want to make sure I don't say a word so that all of our listeners get that clear, because it is, no, it really is so true, right? Like, in all joking, it's stop, I guess people stop focusing on rate. Like, stop focusing on rate. Just really focus on your needs. Understand your own expenses, right? Know what you've got to work with, right? Understand what your needs are, and then ask your person that's trusted those questions based on what your needs and what you can do. And that will then determine what your best rate is, what makes sense for you. But if you just go in hot saying, give me the best rate, I want the best rate, that opens the door for you to walk into a whole lot of problems later, right? So just understand yourself.
Or a common thing is people will go online and take a look at rate sites.
Right.
And again, guys, rate sites are all, including our own, they're fish hooks.
Yeah.
Right. They're outlining no frill mortgages, which we've talked about, or we will talk about, between a no frill and a full frill mortgage.
I was almost going to take us there earlier, but I didn't. I kept us on the course.
They're all about purchases that you're going to live in with less than 5% or with less than 20% down.
Yeah.
Right. So again, they are a fish hook. They're there to strike conversation, but they are not there to say, well, hey, this is what this person can get me, because that's, again, what bucket are you falling into?
Yeah.
Right.
Yeah.
And quite often what you're seeing on rate sites is not a mortgage that you want to get into, even if you fall into that bucket, because quite often it's loaded with a lot of bad personality.
Right. Yes. And that's the one thing I wanted to make sure that you touched on that one, because that's the biggest one. That's the biggest one that gets people in trouble, is that they just blindly throw themselves into that one. Their broker thinks, this is an easy close. I'll just tie this one on to the next. Easy.
Well, again, what I say about personality is like putting lipstick on a pig, right?
Right.
Like, the personalities of your mortgage is like, yes, it has the sharpest rate, but it doesn't give you prepayment privileges. It doesn't give you porting privileges. It doesn't allow you to borrow more money. And if you're going to go from a condo to a townhouse, it doesn't allow you to sell it at how you want to sell it privately. It's all designed for it to be broken. It's all designed for it to incur massive penalties in doing so, because lenders know, and again, this, Allister, lenders know that 7 out of 10 mortgages will be broken for whatever reason within the first 3 years.
Yeah. It's crazy. Amazing, my man. Amazing. Well,
do I sound angry today?
No, you sound excited today, buddy. You sound excited. You're good.
Passionate.
You're passionate today. I love
rates.
it. You brought the passion today. That's what I love. Well, my man, it's been a great pod today. I gotta blow out of here. I gotta go hang up a sign. The guys, the real estate market it's heating up, and it is getting busy. So if you are in the midst of trying to figure out where you are in your plan, if you're not talking with somebody, I truly, truly encourage you guys to reach out to both myself and Geoff. It is not with the intention that we're gonna say, hey, you have to work with us, but at least so that you can have an idea of what your plan should and could look like, right? Just to even get yourself started. We are there to, of course, take you the whole way through and guide you and support you, empower, advise, and represent you. But I encourage everybody, with the market starting to heat up, and who knows what's going to happen if they drop it again. I don't know if we should be too optimistic on getting dropped another 0.25%, especially if it does get super, super busy. It might get them to back off of that. But if it doesn't and they drop it another 0.25% again, it's just going to become that much busier. It is going to take away buying power from first-time buyers, because people are going to get more, people are going to have more money, more assets to be able to purchase properties above them again. So it's important to have a plan, because I know when I was working with my buyers during the pandemic, that is something that we had to quickly shape at the beginning, because they were getting outbid on a consistent basis. So people, have a plan, have people in your corner, but most importantly, have an amazing week.
Oh, even more important,
Whoa.
make sure you follow us on Spotify.
Yes, make sure you're
YouTube,
downloading. Yes, make sure
Apple
you're downloading.
Podcasts.
Apple Podcasts, Spotify, everywhere you get your podcasts, YouTube as well. Everywhere. We are always, and also follow our social media, because we are out there as well. We are out there in the Facebook and as we said, Instagram, and Geoff may be on TikTok, because I'm not, because we talked about it. I don't believe on it. I'm too old. Geoff is 53 years young. I am 47 years old. I'm an old soul that doesn't know how to lip sync and dance. In fact, actually, I forgot to mention that my daughter and her friends tried to get me to jump in on one of their TikToks a while ago. I had to run out, man. I'm not that cool anymore. I was like, before I would have been in it, I would have been jiving, doing my thing. But no, man, I had to run away that time. I'm too old now.
For the record, no TikTok account for us either.
Okay, there you go. All right, brother. You guys, you have an amazing day, amazing rest of the day. Everybody have a safe, amazing week. I encourage everybody again to reach out to us, but have a wonderful time with your families, and we'll chat with everybody next week. Take care.
Y'all have a nice day.
All right.